My goal in this particular interview and discussion, really, Chris, is just to learn a little bit about you, chat about you, hear about your life story, and also chat markets as we do our best to just help and entertain and enrich traders from all around the world. So tell everyone a little bit about yourself, man, your background, where you're from, where you live, how long you've been trading, all the good stuff.
All the usual bibs and bobs that
That's right.
People who have too much time on their hands are desperate to hear.
Exactly.
Well, in terms of backgrounds, I actually have a very non-traditional background. I'm really quite pleased to say that I have neither a degree in finance, business, economics, nor accounting. I was actually training to be an immunologist. My gig is the human immune system, and in particular, viral cancers.
Mm-hmm.
And so I'm a long way from where I started, which is a good thing because the life I have now is very, very different to the life of an academic. Academia can be profoundly interesting, but profoundly wrought with politics, paperwork, searching for grants, the usual things that people have to put up with. Oh, and I forgot to mention undergraduate students, you have to put up with those as well.
Oh, yeah.
And they're a right pain in the backside. So mine's a very non-traditional background. I got into this as an amateur who talked his way into the business, which was somewhat of an experience.
Sure.
One of the things you learn about in trading is the number of mistakes you can make and the number of misunderstandings and sort of misconceptions you labour under. And I started trading whilst still working in my chosen field, and I was doing a bit of consulting for industry as well. And it was the beginning of the 80s bull market, so everything went up, so I thought I was a genius, which is the mistake everybody makes, but, hey, what the hell? You don't want to be unique and stand out. And I thought at one stage that it would be actually good to learn a little bit more about this. One of the good things about Australia is that you are miles away from everybody else. One of the bad things about Australia is you are miles away from everybody else.
That's right.
So getting hold of things like books was always an intriguing adventure. Number of times I had books go to Austria and as opposed to Australia was quite remarkable. And I would have to say to people, no. Think Crocodile Dundee, not Arnold Schwarzenegger. We're in a completely different part of the world.
Sure.
And so I actually talked my way into a broking house, and I talked my way in on the strength that my background's quite quantitative. And they were fascinated by the fact that I had, I don't know whether you would remember them, they're probably before your time as a young fellow, the old Hewlett-Packard 15C calculators. Some people still have the 12C, the financial calculator. They look like a very solid block of chocolate.
Right.
Very clicky, hard buttons, but they were distinguished by the fact that they were built for techs, by techs. And so they don't have an equals button. They're designed for chain calculations. And they were fascinated by the fact that my calculator did not have an equals button. And one of the running jokes on the desk used to be when someone would ask to borrow my calculator, they would stare at it for a while and then give it back and wander away confused. Because with no equals button, they were...
What do you do? Yeah.
Well, they had nowhere to go because it was outside their realm of experience.
Of course.
And so I stayed in broking for a few years throughout the 80s bull run, which was an interesting experience.
What were you trading at the time?
I originally started trading equities because that was the prime preserve of the Australian market. The Australian market is somewhat of it's a dichotomy. Australians are extremely early adopters of technology. So we moved to electronic floors very, very early.
Mm-hmm.
Uh, we started the move in the mid 1980s. So by sort of, as 1990 rolled around, our floors were completely electronic. The trading floors had disappeared
Oh,
in
wow.
all arenas except options, because there was a struggle with working out what you do with market makers and how they would slot into the system.
Sure.
Derivatives markets are dependent upon market makers for liquidity and execution. So there was some trouble getting, these local traders into the platform. And I actually then moved to very, very short-term trading of derivatives, simply because I could understand them. I
Mm-hmm.
understood the quantitative basis of them, I understood how they worked. So that became my niche for a while. And my niche was setting up derivatives trading desks for people. But I think, as with everybody, broking takes a toll, because it's not a very pleasant industry, simply because the moment very large sums of money are involved and people are involved, behaviour tends to go out the window very, very quickly. And so I simply got sick of the people I was dealing with. And the catalyst for it was once I had a little bit of argy-bargy with someone who was on my dealing desk over things he was telling clients. And I lost my temper and picked him up and ran him against the window.
Mm.
That's not so bad. We were 38 floors up at the time. And I thought, okay, that's probably actually telling me something, isn't it? It's telling me, A, that the glass they put in these high-rise office buildings is actually pretty good, but it's probably also time to think about moving into some form of semi-retirement, which I was capable of doing. So it's a very non-traditional background. I don't know how it works in the US, but here in the 1980s, stockbroking used to be that you would go to, say, one of 3 or 4 very expensive private schools. You would then go to one particular university. You would do 1 or so particular degrees, and your father would be a member of 1 or 2 particular clubs, and that would be your entree into the business. So I was somewhat one out of the box. I was a little bit odd, and always regarded as a little bit odd.
And that's usually where stars are born. I mean, if you're different from everyone else, you have a great chance of doing something that no one else has done.
Well, it's one of the things I found interesting is that when you have a different background, you've got a different mechanism for solving problems. You see the world slightly differently. And I was always intrigued when I would speak to friends of mine who were management consultants, particularly for, these big groups like Boston. And they always seemed to hire the same person. They
Mm.
just looked different. They had, either a degree in quantitative finance or engineering. They had an MBA. They had exactly the same background. And I was always intrigued as to how they thought this was going to provide any form of sort of intellectual diversity, where someone would look at a problem and go, I wouldn't do it that way if I were you. I'd do it this way. And it's always intrigued me, this sort of desire for very vanilla carbon copies of yourself within an organization. It's quite an intriguing thing.
I totally agree. And so now, are you still focusing on derivatives, or do you trade something else?
Look, to use a sort of fairly ordinary expression, I'm a little bit of a tart when it comes to trading. I will trade anything,
Yep.
but prime focus is, we have an instrument down here called CFDs, Commodities for Difference. They're very large in Southeast Asia, Europe and Australia. They're actually banned in the US.
Yep.
The best way to think of them is almost like a single share future. You have the capacity to buy equity indice, option, FX contract with very, very, very high levels of margin. So that's the prime focus of where I am, simply because they've got brilliant and rigid execution of stops, which is something I demand.
Mm-hmm.
Very high leverage if you want it. And the platform follows me everywhere. So execution is not a problem. And most of the markets I trade are virtual 24/7 markets, because we come back to that problem again of living at the bottom of the planet. If I want to deal in the US, I have to be awake during your hours.
Right.
And so fortunately, these instruments to some degree fix that problem for me, because they offer them on a continuously quoted basis, which is, it solves that mechanical problem. There's enough problems to deal with in trading as it is without having to deal with mechanical issues. I remember the broking firms I used to work for, we used to have overnight futures desks, which is, for when we were dealing in, say, the S&P 500, gold and the like, and you wanted to deal in the US, you have a desk that was dedicated to being the night shift.
Yeah. Which I'm sure that's like, I mean, what's your schedule like then presently with that difference of time and just that challenge? Are you focusing on trading the U.S. markets now? Are you also doing the Australian markets, or what does that look like?
I'm somewhat fortunate in that I'm one of those really annoying people who gets up very early. And it's just always been the way I am.
Mm-hmm.
So I'm at my desk by probably no later than 5:15.
Mm-hmm.
So I generally catch the US close. Europe's not a problem for us here because the European Open is our late afternoon, early evening.
Sure.
It's the US, and when we both drift into and out of daylight saving, that tends to annoy people a little bit. But because of my hours, my life's actually quite easy in that respect. And one of the things that we try and get people to do, which is it's actually harder than it sounds, is to make use of contingent orders.
Mm-hmm.
Let the system do a lot of the work for you and get used to dealing in that way. Now, one of the good things about CFDs is one of the providers I use runs what they call an all sessions market. So they have most major US stocks quoted 24 hours a day. So I'm quite capable of being lazy and coming back from breakfast at 9 o'clock and still dealing in something like Facebook,
Sure.
because this virtual market exists, this out of hours market. And
Sure.
again, it's that technology can be a pain in the backside for trading because there's simply so much information now. And I have some degree of sympathy for millennials who are trying to start trading now, because when I started trading, information was scarce. There was very, very little of it around.
Right.
You were restricted in what you could trade. You were restricted in the amount of the sheer bombardment of noise. I mean, I've got my phone sitting beside me, and should the whim take me, I could pick it up and start placing orders for, the market in Norway.
Yeah.
And I could get all the data that I ever needed for
Yeah.
that particular market.
Yeah.
And for a generation that has grown up using things like a phone as, almost a third limb, I have some empathy for their, A, addiction to the device, and B, the amount of information they're getting bombarded with markets, because markets now are nothing if not information rich. There is so much coming out to hit people that it's really quite staggering. And you've got to find ways to navigate your way around that and to actually just simply somehow filter it out so it doesn't do your head in.
I mean, that's a great point, because I've been asked that a few times myself. So I will ask you, Chris, how do you avoid the noise, or how do you know which noise to listen to, or do you create your own, or is it a service, or what does that look like for your trading
I,
specifically?
I'm very fortunate in that uh, I have a very high degree of arrogance that runs me and my life. And so my view is that if I didn't think of it, it's not a very good idea, which is, probably a little bit over the top. But what it does is that it puts a buffer between me and everybody else. So I just switch everything off. My approach to life and trading is really, really simple. If it's not, no, let's go back a step, because that's a better place to start. I have a philosophical belief, and my philosophical belief is quite simply that all the information I need to know is encapsulated in the price action. And I run a metaphor that says that the market is exceptionally generous and it will tell me everything I need to know and it will offer me these opportunities. My role is to get out of the way of myself. That's where I and others, and probably everybody else, runs into difficulty. You get in the way because your brain starts to go, yes, I've seen that, but I think, I know, I've heard. Now, you don't know anything, because the only opinion that counts is the market's. Your opinion doesn't count at all. Your narrative doesn't count. Your story doesn't count. All that matters is what the market says. I have this wonderful chart I look at every now and again, which is, I think he's a Brit living in the US, John Borman. And you can find his Twitter feed at J Borman. Borman is spelled B-O-O-R-M-A-N. And he produces a chart every now and again of the S&P 500. And it's got all these guru predictions dating back to post the GFC. Yeah, we're actually after John Borman.
Is it, so how do you spell it? You said B-O-O?
B-O-O-R-M-A-N. So it's J Borman. There he is, John Borman.
Got it.
And he produces this little graph, which he updates probably twice a year. And what he does is he looks at predictions people have made. And they're all predictions about world's going to end. This is the reason the world's going to end. And of course, the S&P 500 in that time has doubled.
Mm-hmm.
And his favourite, along with mine, is Mark Faber. And Faber is constantly going, I expect the market to fall 80%. I expect it to fall 90%. We should have 100% inflation by tomorrow.
Yeah.
And of course, none of these predictions come true whatsoever. But this is just noise that infiltrates into the way people think. And I continually post this for people when they talk to me about their predictions, about what they think is going to happen. We all operate in profound uncertainty, but that's a good thing.
Mm-hmm.
Because it's the uncertainty that gives us the opportunity to profit.
I like that.
People say to me, can you give me a guaranteed trade? And I say, yes, I can. Completely guaranteed. You'll get no return though, because you don't deserve a return. And it's simply called putting your money in the bank. You'll get zero return. You'll be charged fees. But at the end of the year, your money, less whatever fees have been charged, will still be there. It's a perfect trade.
Right.
If you can't deal with uncertainty, and this is the issue with traders, it is this trying to find a way through the minefield of uncertainty. And the unfortunate thing about life now is that I think the noise simply generates more uncertainty. And there is so much noise. If you Googled something like Bitcoin trading, God knows how many responses you would get.
Oh, man. Yeah.
And they would do your head in. And it would be from everybody proclaiming to be an expert. It would be from everybody proclaiming that Bitcoin is going to do this, that blockchain is going to change the world, blah, 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 blah. And that just does everyone's head in. And so I'm quite fortunate in that I just ignore it. If it's not on the chart, then it's not real. It's a variation of what I tell my wife with our calendar. If it's not in the calendar, it doesn't exist. So there's no point turning up and knocking on the office door at 6 o'clock saying we're supposed to be going for dinner if it's not in the calendar. Because if it's not in the calendar, it doesn't exist. Likewise, if it's not on the chart, it doesn't exist. It's just not real. And but it's difficult to get people to that point because
Yeah.
we want to know what the story is.
Shoot, that's a great quote. If it's not on the chart, it doesn't exist.
And
I like
it's this
that.
thing of, I must have the story. What's the story? Tell me the story.
Yeah.
It's that thing of, if we feel we know what the story is, we feel a degree of control. But there is no control. I mean, we all know that. It doesn't matter what time frame you trade, whether you are a day trader or a position or block trader, there is no control. You just hop on the bus and you stay on the bus for as long as it's going in the direction that you want it to go in.
Right.
And the moment it stops going in that direction, you get off.
I love that. I love that. So tell me, are you on Twitter, by the way, Chris, since we're here?
Oh God, no.
Okay.
I hate social media.
Well, that's okay. I mean, so as far as since we're on the topic of social media just a little bit, do you have any social media favorites as it comes to potentially an investment down the road? Like maybe Match.com or Facebook or Snapchat. Any thoughts or opinions on that at all?
Look, not really. Simply because I've, to a degree, withdrawn from that market. Because one of the things that's intriguing, and I found immensely fascinating the other day when I actually did it, was by accident, I saw a piece that ranked the 10 most valuable technology companies in the world.
Yep.
And for some reason, I was really surprised that Microsoft was at the top of the list.
Sure.
Because we all remember that time, 10 years ago, during sort of the very hyperkinetic Steve Ballmer years, when he used to launch himself across the stage in this great sweaty, screaming mass, and you'd think, this bloke actually runs a company. This is amazing. And they were being buried under things like the iPhone, their missteps into tablets, their missteps into phones. So I went back and I mapped the performance of Microsoft versus the FANG stocks. And Microsoft, over the time period I looked at it, is actually the second best performing stock, which I was really surprised at.
Right.
And I actually think that one of the things that I look at, and I was, before we began chatting, I saw a brief article about the orthodontic group, Smile Club, who just listed in the US this week. And I've got a bit of an interest in them because a friend of mine's an orthodontist here in Australia, and his business has been dramatically disrupted by this capacity to get, orthodontic work and braces done literally over the internet.
Sure.
And a lot of these, particularly the social media or the technology moves we see, can now be regarded as mature. But there's a second point in there, and that is a lot of them remind me of, particularly groups like WeWork, remind me of a lot of the listings that popped up before, the .com bubble burst. WeWork to me looks like pets.com, where, there was this notion that you'd start an internet company and sell pets to people on the internet and put them in a post back and post them to them. And for some reason, Wall Street didn't think that was a bad idea and would never work. So a lot of it looks like that to me. And one of the things that I find intriguing is that you see markets repeat themselves, and they repeat themselves endlessly. And several years ago, whilst I was in London, all the talk at the conference we were at was about Bitcoin. I went back to my room, and I like the history of the markets. I love looking at market history simply because it repeats itself, and it has to repeat itself. And I dug out some data I've got for the South Sea bubble, which took place in 1720.
Mm-hmm.
And I overlaid it over the top of Bitcoin as it was, and they looked identical. It was really quite remarkable.
Right.
When you overlay one frenetic manic boom over another, they tend to look the same.
Sure. Absolutely.
And one of the things that always sort of piques my interest and sets my radar off is when people say, but this time it's different. No, it's never any different. We've just come out of a real estate boom here in Australia, which has been extraordinary. And throughout the boom, all you were hearing was, this time it's different. You know, it's not, because your boom ended in a bust, as all booms do.
Yep. Agreed.
There's no way around that. That's just the way humans are. Humans are like 2-year-olds who've had too much red cordial during the boom. They get stuck into the red cordial. They run round, and then they generally run into a door, fall over, lay on the ground, and cry.
Right. Yeah.
And that's the way humans are.
When was this conference that you were talking about? The one that they're talking about Bitcoin?
2 years ago.
Okay, gotcha. So, I mean, I know you can see my chart. I'm pulling it up now. Since we're on the topic, I know you're a chartist. What's your opinion from here, based on either technicals or just whatever else that you think would be elevated from on the Bitcoin?
One of the issues with Bitcoin is you see this wonderful long base that stretches back to Bitcoin's origin, and it admittedly it looks so compressed because of the scaling issues as Bitcoin roared its way to $22,000. So you do get that scaling problem. But you can see the depth of the collapse and then the dead cat bounce. You've now got this almost like a picture perfect textbook flag appearing. But the thing that always concerns me about markets is you can see when Bitcoin was going up, the candles were very large and blocky. They had very small tails. Look at the tails now. And this tells me a story about the way people feel, the way people think. There is a reticence to allow that speculative fervor to run again. And I'm also wondering whether what you're not getting is a lot of relief selling. So the moment you get an instrument that punches up like this, you will get people who bought that dip at around, the $4,000 mark. And so they will sell at the first opportunity they've got to take a decent profit. They will rip out. You've also got people who are left over from the boom, and they take it as enormous relief to go, well, thank God I can finally get out.
Yeah.
So whenever you get this punch up, you get this spiking down as the selling comes in. And this is why you've got those wicks pointing skyward. It's simply because it's almost like for the sellers are playing whack-a-mole with the buyers' heads. The moment they stick their head up, they get belted by the selling. And whenever you see that, you get that causes me not cause for concern, but it is one of those things I look at and go, that's interesting. I've seen that before. And you see it in these relief rallies. You see it in equities over all sorts of time frames. You see it in FX. You see it in commodities. It is simply that people take the opportunity to get out, because one of the things about markets is, and we come back to this notion of uncertainty, uncertainty causes pain. And if you're in something and you're consumed by this uncertainty, the easiest way to end the uncertainty and the pain is to leave. And if you can get an opportunity to get out at square or perhaps make a little bit, then you've got enormous relief. You feel so much better. If it's a little bit like having a tooth removed. The notion of going to the dentist is full and stressful for people, but the moment the tooth is removed, you go, thank God, that feels so much better.
Right.
And I think when you get these fervent speculative markets, you get this relief where people just belt these things, and there will be a lot of people left over. Anecdotal story, case in point. You've spoken to my business partner, Louise.
Mm-hmm.
We were having coffee one afternoon. We have afternoon catch-ups where we defrag about the day and what's occurred. And we were sitting there and we could not help but overhear the conversation. And the conversation was a young girl trying to convince her friend to sell everything and buy Bitcoin because Bitcoin was going to $1 million.
Right.
And that was her belief.
Yeah.
And the intriguing thing is that when you hold a belief fervently in the absence of evidence, you've actually got a religious belief. You don't have a belief grounded in fact. You have faith.
Interesting.
And that brings about all sorts of problems. And Bitcoin itself, for many, is a faith-based investment. It is something they believe in fervently. And so there will always be people involved in cryptos because they believe so fervently that, blockchain, the underlying technology, is going to change the world. But that's also partially mixed in with their worldview.
Sure.
And they have this sort of what psychologists call naive realism, in that they believe that their worldview is the worldview. So when they talk about this technology being a means to combat the conspiracy of central banks, that they have a worldview that is somewhat skewed, but it sustains them and it sustains their involvement in this. And my view is that people who trade in, well, no, let me rephrase that. That's wrong. People who invest in Bitcoin as the next world-changing thing, in terms of their psychology, are not that far removed from survivalists who say we should buy gold because when the world ends, you can eat gold. I don't think you can, actually. It's that same mentality. It's that same naive view of the world. But that view sustains them because it acts as an issue of faith. It's a matter of faith for them.
That's a very, very interesting point. I haven't thought about it that way, to the extent of, if you have just from almost a big macro exterior viewpoint, if you have that type of faith in something without specific evidence, then it could just simply become a religious belief, regardless of, what it is or what's, if it's right or wrong. That's really what you're working with.
That's what you're working with. Think of it this way, and we wouldn't both know people like this who have an almost religious zeal, pardon me, in the diets they follow. I've got friends who are vegans. Some are very, very sensible individuals who simply say, I've made a moral decision that this is the way I'm going to live my life, and you have to respect that. There are others who are complete and utter nutcases, and they have a religious belief. There are people I know who are on ketogenic diet. Theirs is a religious belief. There are all sorts of subsets to this, and that's a religious belief. People love to have something to believe in. It gives them currency, but it also makes them part of a group. Because one of the things about social media is that it's an echo chamber. So if you're a Bitcoin trader, what do? Well, you hang around Bitcoin forums.
Yep.
What do Bitcoin forums tell you? It's going to change the world. It'll be different, but there's a conspiracy to undermine it because in their mind, the world works on conspiracies. And so all traders need to be immensely careful about being caught up in their narratives. And I even see this with people who, buy what you'd call investment grade stocks. Mm-hmm. To them, it's got a good story, and the story fulfills a need or some gap in what they're looking for. So trading is this wonderful sort of, for many, quasi-religion.
It's a very, very interesting point. I love it. Let's switch gears for just a moment then, Chris. If you would you be able to elaborate a little bit on just as far as your specific trading strategy or style or approach, what time frames do you use and what do you look for to get into or get out of the trade?
I believe in scalability. One of the things you learn in the physical sciences is that all ideas must be scalable. And in markets that are fractal, that is, that they self-repeat over various timeframes, in terms of their patterning, that works. So I'm a really, really, really simple trader in that I buy breakouts in existing uptrends. I sell price breaking down in existing downtrends. And I do that over a system that encompasses 3 timeframes: 4 hourly, daily, and weekly. The weekly system trades equities only. The daily and the 4 hourly system trade a small basket of indices and commodities. And so they have quite a narrow focus. And I find that the commodities I trade must have a single component, and that is they must be almost 24-hour-a-day markets, so that they have this continuous quotation. The moment you get this punctuation in markets, and stock markets do this because they have a firm open and a firm close. Our market here in Australia for our equities, begins its opening process at 10, it's fully open by 10:20, shuts at 4. You then have this overnight gap where anything can happen. And so that's why I displace that sort of trading or trading of equities out to weekly data. Whereas the commodity markets I trade might have a break for half an hour, and
Right.
that's not an issue. So that window of something going wrong is very, very narrow. And so I have this liquidity. I don't have a liquidity problem, because one of the fundamental practical problems that hits traders is that they run into this liquidity barrier. And it's one of the reasons why, for example, Australians don't intraday trade stocks like the US does, because we don't have the liquidity in our stocks to enable us to move size. And so you get these barren patches throughout the day where you might not be able to get out, where you might be stuck, or where price might gap well beyond where you want to get out. And so all of a sudden, what was looking very promising has turned into somewhat of a disaster.
Yeah.
And I solved that problem by simply shifting equities out to weekly. And to me, equities look better on a weekly chart. The data seems cleaner and clearer. They just look better. And my view of equities is that I split it philosophically.
Okay.
The short-term system generates cash. That's its job. So that's its part of the business. The longer-term weekly equities generate wealth. And so they're designed to... I'm looking for the situation where you buy a stock at 1 and eventually in 15 months you sell it at 15, having continuously pyramided in all the way and added to the position. Not that I buy it today at 1 and I sell it next Friday at 107 and think I've done really, really well.
Right.
And it's a little bit lazy, but it does something very clever. It removes me from the equation, because you only look at them once a week.
That's
you're
right.
You're not continuously sitting there obsessing over them. And this obsessing that people do over their positions is somewhat it's not helpful, because you can't make a stock go up or down. You're just a passenger, and you have to accept being a passenger.
Yep, which is correct. At least I think the weekly time frame, again, like you mentioned, looking at it once a week, that's a very interesting approach, because a lot of people do stress too much about their positions, especially if it's an investment. I mean, that's what it's there for. It's created to create wealth for you, but that takes time, takes longer than a lot of people want to, they want to hold for.
Oh, look, and that's true. people seem to think that trading is the lottery. And the analogy I use is that traditionally, my view of the way people approach trading is that what they do is, they watch Wall Street, the original 1980s version, on the weekend. They think they'll start trading on Monday. Wednesday, they'll buy a Porsche. And Friday, they'll buy an island somewhere. And that's not the way it works.
Right.
It's a business. And it's a business that takes structure, time, commitment, effort. And as we both know, there are some days when it's the best business in the world. There are other days when you think, maybe I should get one of these mowing franchises or something.
So you're telling me that even after all of your years, you've had the same thought of, should I just stop this and just go buy a franchise and ice cream?
Some days it's a little bit. I don't know whether you have this experience. Like some days you get in the car and you got to park it somewhere, and you go, "Have I ever parked a car before? I've made a complete monster of this. What the hell am I doing?" And this is with, my cars have these, 360-degree cameras. I've got helicopter view that creates a composite view from above. It gives me little markers and guidelines and all the rest. And I still end up on the gutter thinking, what the hell?
Yeah.
Trading's the same. Some days I just sit there, what the hell? And really? And whilst you shouldn't have the emotional connection with it, there are some days when you think, when you're in a cluster, and clusters are a function of a natural system, you think, I can't buy a winning trade. I just can't buy one. And that you just have to accept that you're part of a natural distribution. You're inside the distribution, and that's it. But everyone has those days. Everyone's goes off their game during periods, which is why I'm always amazed. Like I am actually on LinkedIn, so I am actually on one social media platform.
Okay.
And I'm always amazed because my LinkedIn feed picks up for reasons I do not understand. I get all these ads from algorithmic traders.
Oh yeah.
And their equity curves, when you look at them, they start bottom left and they end top right, and they've got no drawdown. And you think, how can that be? How can a system not have a drawdown?
Mm-hmm.
All natural systems have drawdowns. So you know when they're fake, because my system has drawdowns. Everybody has drawdowns. There's nothing you can do about it.
Well, it has to, because that's the way the market. That's the way all natural anything grows. Like when you sleep, right? Like
absolutely.
Market's organic, and so in order to have anything that's organic, like your P&L,
yes,
or your account balance, is going to look like the market. It's going to do something like this, and it's it's the same thing.
And the word organic is the perfect word. It is a living thing.
Absolutely.
And it's a living thing that you interact with.
Mm-hmm.
And so there will be times when you think, what the hell? Is it real? What? Come on.
Yeah.
But when you look at every real equity curve in the world, and it doesn't matter whose it is, I went on a little bit of a fossicking expedition a while ago, and I got the true results for Renaissance Technology, Jim Simon's group. Now, Simons is a legendary hedge fund manager, former cryptographer, has an equation named after him, exceptionally intelligent. The returns from Renaissance are extraordinary, even after the outrageous fees they charge. Guess what? They have drawdown.
That's right.
And it's simply, there are some days when it's really, really good to be in business, and there are some days when you go, yeah, no, that's a pain. Should have stayed at university or something. I don't know.
That's right. So tell me, give me just a little bit of advice. What do you do when you have a bad day? Is there a cures or anything you do specifically that helps, especially if you're in a losing streak?
Yeah, look, because I'll come back to your word. Organic. I have a sort of a metaphor, a way I view the market. And the way I view the market is the way I view surfing. There are some days when you would head down the beach and you would just sit there all day going, this is great. I'm cold. Nothing's happening. There's probably a shark under me. I'm going home. And there are days when you turn up and every day is a winner. You
That's
think
right.
this is amazing. But the intriguing thing about waves is they all end. There is no continuous wave. There will be waves that you will talk about with your mates forever. There will be ones that you will talk about with your mates forever because they picked you up and driven you into the bottom of the ocean and you go, God, that hurt. And there'll be days that you talk about with your mates because they were so crap. You just sat there getting cold going, I think I might pee in my wetsuit to warm myself up.
That's right.
But it's just an organic thing. You just have to accept that that is the nature of the beast. You can't force markets to give you a trade. You can't force them to give you a profit. One of the biggest mistakes I see in traders is this notion that they can somehow force the trade that is not there, or they try and revenge trade. But one of the things I operate on is, and when I do hit a cluster of rubbish where it's just not working, I do two things. I go back and look at previous winning trades to convince myself that, yes, I can actually do this, and the system
Yeah,
does
that's
actually
smart.
work.
That's smart.
I then go back through markets, even markets I don't trade, and I put them up on big screen, move the chair back, sit at the couch at the end of it, and I scroll through them and I look at the number of extraordinary trends that over time the market gives. And so I default back to sort of a saying I have, and that is on average over time. And so we're dealing with the notion of an average and deep time. And that begins to put everything back into perspective. Because I think what happens with people is that traders have FOMO. They have this fear of missing out. They don't want to miss out. So they take trades that are suboptimal or that are not there. And it's somewhat difficult to convince them that markets are really generous. They will, over your trading lifetime, present you with an extraordinary number of variations on the Bitcoin theme of where something goes from 1 to 100, or the run that Microsoft has had over the past few years. And the market will say to you, look, here it is. I'm offering you the chance to be on board. Do you want to be on board, yes or no? And people just have to convince themselves that that's the natural state. That's the natural way the world works. I mean, look at the chart you've got up at present. You can see, look at the basing you've got at what's that, 20, between 20 to 30.
Yep.
You then get that beautiful breakout over the course of, what do you got, about a year. The market does that over and over again, and that's a classic breakout. And so you've got this congestion. You've got a lot of distance between your entry and where the previous failure was. So you can snipe this position and take a position and go, well, look, even if it gets to its previous peak of what, about 60 and falls over, I'm still clear. And if it runs beyond that, it is telling me a story.
Yeah.
It's telling me that they don't care about that previous peak and they're now off. So I should be a pig and pile into this. And one of the things that's difficult to convince people of is that opportunities like this pop up all the damn time. You just have to see them.
Yeah.
No, because what happens is people see them and they ignore them.
Yeah. So here's a
They've
totally
got,
different chart right here, Chris. I mean, there's,
yeah,
it's not exactly the same, but it's
but
massively
it's,
similar.
yeah, it's very, very similar. You've got that congestion, that long-term congestion from 2016 to mid-2018. False breakout, tweezer top, comes back. But then once it punches through that, it's off. And again, it's telling you a story. And you'll notice something really interesting about this. You've got nothing on the chart. There's no indicators on there. There's nothing scribbled on it. It's simply the price action.
Mm-hmm.
And this, I can't remember who it was. I'm going to attribute this to Ed Sakota, and I don't know whether it's right.
Okay.
He said that if you wanted to work out what the trend was, put the chart up on the screen, walk to the back of the room, turn around, look at it and glance at it, you'll know instantly. Without anything on it, you'll know instantly. And it's difficult to convince people that price is the purest form of information you have.
Yeah.
It tells you a story. And if you scroll back down to where that tweezer top is down, what have we got? If you go, there's that one, and there's one slightly to the right of it, which is the next peak. That's told you a story. That one there. See, what's that, 64, 65? Once that gave up from that retracement, you've been told the story. And the story is that, look, there's probably $30 in this for you. Do you want it? Yes or no?
Mm-hmm.
Because I'm going in that direction, whether you're on board or not. Your participation is irrelevant to me, but I will go in that direction. And people are very egotistical. They seem to think that for some reason that if they don't buy it, that it won't go in the direction it wants to go, but it will. So you can either choose to be on board or choose not to be on board. That's just choice.
Right. Yep, you're absolutely correct. And like I said, these are patterns that shape up very, very frequently. I mean, here's another one. I think it's a little bit of a bigger version of kind of what we're looking at, but just looking at the chart, look at this gorgeous chart, man.
Yeah, but it's the same sort of thing. You see that 2016 to 2018 was a pretty ordinary period for these stocks, but you see that base. She then breaks out of the base, and off we go again. And so again, you're told a story, and the story is I've broken out of the base at 20, and I'm off. Do you want to be on board, or do you not want to be on board? And it's always, I'm always intrigued. And look, I have noticed it in myself because there are always trades you will miss.
Yep.
That's just the way it is. For some reason, all systems miss trades, and you have to accept that that's part of the business. But I am intrigued why, when you find people who see the trade, don't take it. They have some narrative in their head that says, don't take it.
What is that narrative usually, you think?
Look, it's an intriguing one. And I think it's this strange mix of, well, it can't possibly be worth that. It can't go any higher. I have heard. Case in point is Facebook, after it listed, had a fallback, recovered from the fallback, and just took off.
Dominated.
That's just magnificent because we go from about the low 20s through to 180 in an unbroken run. And you don't see many charts that start bottom left and end top right.
Yeah, that's amazing.
And do it in an almost linear fashion, because if you look at the moving averages, there's very little perturbation in them.
Mm-hmm.
Even the short-term moving average, there's very little perturbation. It has a few undulations, but it's almost like you've drawn an almost straight trend line through it.
Yeah,
now, granted, the longer term has smoothing because it's collecting more data, but it has this almost rectilinear appearance, which you don't normally see from moving averages. And I had conversations with people, and they're saying, look, Facebook's just, MySpace. Yeah, I don't think it is.
Mm-hmm.
I don't think it is. Or social media is dead, or everybody's now on Twitter, or young people aren't using it. How the hell would we know what young people are using? Because we're not young.
That's right.
So you don't actually know what their tribe is doing. You have to accept that the market knows what their tribe is doing and is telling you. And that's an immensely powerful little chart. Oh, good old snap. That's not a happy story, is it? At the beginning, is it?
No, it was not.
That was, yeah.
Yeah,
Yeah, they were poor buggers, weren't they, on that? When that kicked off, I felt sorry for them.
Yeah, but I mean, it's recovering, and
It is.
people are starting. There's starting to be good recoveries and good discussions, and people are spending more money. And the thing is, like the people that were 3 years ago 13 and on it and had no money are now 16 and still on it, and they have a little bit more money now.
Yeah, and this is the thing, you're getting maturity in the audience.
Yeah.
And if you look at it just from a technical perspective, you see that almost for your reversal scallop bottom,
Mm-hmm.
where it just reverses, and even the volume is healthier. So you get that, it's almost, one of the things I think people do is they forget all the things they see in normal life, and they tend to ignore completely in trading. And think of it this way, if you're a plane that is in a crash dive, you don't just pull straight back up and go straight back up. You don't do that. This is not Top Gun. You've got to bleed that energy off. And so you bleed the energy off by scalloping a little bit, which is what Snap did at the bottom. And then away you go again. And because trading is really just, it's the market's version of energy management. It's got to find a way to manage the.
I like that. Yeah.
It's got to find a way to manage the emotional energy of all the participants in some way, shape, or form. And it's got to express that, and that's what it does. And you can see that in Snap. You can see how unhappy it was when it kicked off, and so price expresses that by simply going, "Yeah, right, we're all out of here now. Thank you." It didn't open at $150, so that's it. I'm going to throw my toys out of the pram and leave. And then all of a sudden you look at it 2 years later and go, well, it might be time to pick my toys back up again.
Totally agree, man. That's I told Luis the exact same thing. I have no idea what it is about your mystical accent, but I could just keep talking to you like 9 hours straight.
It's Australians. I must admit, Louise and I were in New York about 3 years ago, and we were having breakfast at Central Park, which is, whoever thought of putting a park that's twice the size of Monaco in the middle of Manhattan was a genius, because it would be unlivable without it. And it's a magnificent place. You can wander around Central Park for weeks, and we were staying right opposite, so we would just wander across. And we were sitting there having breakfast, and one of the unfortunate things about the Australian accent is it comes in various iterations, like the American accent.
Oh yeah, of course.
And we were sitting there, and I heard this voice go, Cheryl, we'll do that tomorrow, I think. And I thought, oh dear God, do we sound like that? That's horrible. Like that's awful. Like what the hell? No.
Oh,
You just think, oh God, no, that's horrible. Let's leave in case they think it was us.
that is so funny.
And we don't have the variety of accents that you have in the US, or that particularly that the English have, but there is a distinct divide between sort of the northern part of Australia and the rest, as often there is in countries. There's a north-south divide.
Man, well, I mean, it was just an honor and a privilege to have a seasoned veteran as yourself and learn from your wisdom. So I've sent you a LinkedIn request. For those of you who are interested, again, we've discussed and chatted with Luis Bedford. That will happen again. But this discussion was with this beautiful human being right here, Mr. Chris Tate. They work alongside each other at the trading game and enrich lives down there in the Australian continent as they help people learn so much and give great content. So make sure to visit their website. Chris, thanks so much for being here, man. I truly appreciate you.
Thank you, mate. And you are coming to visit us, aren't you?
Yes, it is on the calendar. So that'll be happening at some point in the future, man. I'm pumped.
It's in the calendar, so it's real.
Yeah, that's right.
We'll get to bum around Sydney.
Yep, I'm excited to see you.
Get prepared for a very long flight.
I will indeed, my man. I will indeed. Chris, you're awesome, brother. Have a great rest of your Sunday, okay?
Thank you, mate. It's been a pleasure.
Likewise, my friend. Take care.